Recent evidence suggests that China may be opening the funding taps again, easing restrictions on local government borrowing for major infrastructure investments to encourage growth across the country. Does this change the case for going long base metals? SP Angel is one of the city's most accurate metal forecasting agencies. We're now joined by John Mayer, partner and mining analyst from SP Angel. John, welcome. I should say, of course, you're a broker, not just an agency, but you're a broker, but you do go into this market and forecast base metals. So let's take a look at this in the context of what's happening in China at the moment. Do you think that the case has changed? We'll see in a few moments the charts, or a lot of them have been bumping along the bottom. Is it time to go long base metals again?
Well, we spend a lot of time looking at the metals and forecasting where we think they're going to go, and we do that because we're talking to mining companies all the time. We're looking at the global environment, and particularly at China and what they're doing. And you are correct in that China looking to do more infrastructure is definitely a boost for metals. It'll boost the demand for the key base metals and for the steel related raw materials and a whole bunch of other things besides. And that's a major deal in metals markets because infrastructure is a huge consumer. So if you're building bridges, if you're building new infrastructure for electric vehicles, if you're building new airports, all that stuff seems to use a lot of metal content, and it's just a huge driver.
Yeah, well, let's take a look at some of these. You mentioned other aspects, not just China, but we've spoken about this before. If we bring up a chart for copper, for example, we see this bumping along the bottom here. I say, is it an opportunity now to go long? We've been talking a lot about the outlook for copper in the context of everybody now moving or trying to move towards electric vehicles, which is going to use more copper. But the markets don't seem to have taken off yet. Why is China so important, or is it just a collective sort of build-up of potential demand that you're most interested in the longer term?
Well, let's set the scene. The trade war has unsettled a lot of investors, and a whole bunch of particularly US hedge funds, but in fact hedge funds from around the world, have taken a negative view on metals over the last few months and sold or short sold these metals down. And so that's what's caused the prices to pull back to where we are today. I don't think they necessarily forecast that China would step in and say, we want to build a whole lot more infrastructure and ramp this up again. I think that's outside what they were forecasting. They, certainly in the States, they were looking for Trump maybe to settle on the trade war in July. But I have the feeling that expectations may be pushed back a bit going forward. So if we try and forecast the market expectations, perhaps that won't settle in July. Maybe Trump will settle in September. I mean, I think we're pretty sure Trump is going to settle on the trade war and that tariffs will be rolled back to some degree, and then more confidence will return to markets. But in the meantime, the Eurozone appears to be heading towards recession. We've got some problems in Latin America, particularly with problems at Vale and the iron ore issues there. And at the same time, China is saying, well, we want to carry on growing. And so the way we do that is by pumping more money into infrastructure and building more stuff. And history says that they've been really good at that over the last 20 years. And every time there's been a bit of a crisis in the rest of the world, like the global financial crisis caused by the subprime issues in the States, they've pulled themselves up and they've actually pushed ahead when everyone else has been slowing down. So I think what this tells us is metals demand will take off again, particularly for copper, lead, zinc, tin, the whole range of metals. In fact, iron ore is a particularly important one. The Chinese love to build things out of steel, and that is a more modern way of doing stuff anyway. And the demand will pick up again.
Well, let's go back, if we can, to the copper chart and start from the beginning of the list you've just been mentioning there. One of the true base metals. In terms of the way in which you see this moving, let's forget about the date, but your impression you're giving us is that you're going to expect a higher copper price. Are we talking about these highs all the way up here that we saw, what was it, June last year, where we were at something like $7,300 a tonne? Here we are now at $5,800, considerably lower. Are we talking that sort of recovery, or is it just a halfway? What are you forecasting at the moment for the price?
Well, in fact, I personally would forecast much higher copper prices going forwards because it's very high.
Even the highs back in June last year?
Well, yes. I mean, we don't get there immediately,
sure.
But I do see a longer term run in copper because where is the copper going to come from? The discovery rate on new copper mines is so low, and the grades on those mines is not really enough, and the capital cost usually for these things is in the billions of dollars. And personally, I have an awful lot of my net wealth now focused on copper, because the world is going to need a lot more copper, particularly with the electric vehicle revolution coming at us at a rate of knots, and the mines are going to really struggle to keep up.
So it's demand and supply where there's a problem.
Yeah, oh, definitely. I mean, at the moment, the market's pretty well balanced, probably a small surplus of copper supply outweighing the demand right now. But that can change really fast, and I think that has to change. If you have a few strikes, or shall we say some pit failures in somewhere like Chile, which is the world's largest producer, and they're having to go deeper and into lower grade material in order to mine that copper for us, and spending billions of dollars to get at it as well. And that all says to me the cost has got to go up and the supply is likely to come down.
Let's look at some of the other charts. I've got a nickel chart here, same sort of thing in as much as it's not quite as low as we've seen copper recently compared to the lows that we had earlier this year. Lead is another one you mentioned, and that has struck a new recent low. Zinc, another one where we've seen the market the slightly higher lows, but nonetheless still bumping along the bottom to a major degree. Is it the same sort of balanced market at the moment, waiting for things to change, or are the dynamics different in these other base metal markets?
Well, generally the way markets work is they're generally balanced, but there are surpluses in some areas. Now, nickel prices have been coming down because there's been some surplus there, but we can see a developing deficit in nickel sulfate for battery demand, and actually quite a big deficit developing there, and Roskill were forecasting 900,000 tonnes by a certain date, and they're pretty big numbers, and so these commodities are again going to have to lift up, because where are the new nickel mines coming from? BHP have got some new nickel sulfate production coming out of a project in Australia, but it's not very much. It's 25,000 tonnes. It's nowhere near what the market is going to need, and the big mining companies are looking at this market and saying, well, there's going to be a premium in the nickel sulfate market, that's for sure, because to produce nickel metal and then go back to nickel sulfate starts to get expensive. So where are these projects going to come from? So you need nickel sulfide style projects. You can't go to the old nickel laterites that were developed some years ago, and to be honest, they're too expensive to develop again now. And somebody's got to find these mines, and they're very few. So there's a mine being restarted in Zambia, for example, which looks quite good. So there are a few restarts that can happen, but they're generally fairly small scale. There's nothing really big on the horizon in nickel. Again, we can look at zinc, similar situation. Lead, which normally we wouldn't be talking much about lead, but the Chinese are producing less lead and zinc because the two metals generally occur together because of their anti-pollution drive. But the irony of lead, although it's being replaced by a lot of lithium-ion batteries, is lead is actually incredibly recyclable. It's very easy to take a lead battery and recycle that, and all the recycling chains are in place. And so I think it might have a longer lifespan than we imagine. When you refit a battery to your car, you're generally refitting the same old lead battery that you fitted a few years ago. You're not replacing it with a lithium-ion battery just yet, although one ought to be doing that, and they should be better quality. But there seems to be a robustness in lead-acid technology that isn't quite there yet in the other technologies.
I just want to bring up a chart as well of iron ore. You mentioned steel, and I think going into this interview you said technically speaking it's not a base metal, but it has a big part to play when looking at the steel industry. Explain more about this, and the fact we've seen this lift up recently from the lows that we had, 25th of November, 456, and here we are now at 737. So a considerable uplift we've seen over the last 6 or 7 months or so.
Well, iron ore seems to have the potential to surprise us time and time again, and to excuse the pun, it's a foundation of Chinese growth, Chinese infrastructure, and it has been for a long, long time. And yes, China is driving the demand, and this is a classic example of what happens when you have a supply side problem, whereas in Brazil we had these two terrible disasters where tailings dams collapsed and people were killed. And so the Brazilians have been cutting back on iron ore production as they've had to close certain mines and check other tailings dams so that they don't repeat these disasters, and let's hope they don't. So what this has served to do is drive up the iron ore price, because the Chinese are having to buy better quality iron ore if they can, and that's only really coming out of Australia now. Okay, there's still a certain amount coming out of Brazil, but it's reduced supply, and so the Chinese are paying up for it because they really need the product.
Okay, so where do you see things developing, and what's going to be the trigger point in terms of the event, or may even be the point of the year when we could well see an uplift? Is there anything that you're looking for to give it an indication that the catalyst has struck and we're going to see a turnaround?
Well, the world always has the potential to surprise us. I mean, the first trigger point, or the most obvious one, is Trump signing a trade deal.
Right.
But there could be other things. I mean, if Chinese growth is stimulated faster than one might expect, so if China grows more than 5% year on year going forwards, that looks great to me. Depends whose figures you really work off. If the European Union drags itself out of the slowdown that it appears to be in, or if the US carries on growing despite the Trump tariff situation. And actually, I think the US will grow economically as it has done under Trump. And I think even though the tariff situation might make a few products more expensive within the United States, I think the US industry is going to take the situation and ramp up confidence, ramp up production, and that will naturally draw in more and more raw materials. So I don't see the tariff situation as such a big negative in the way that many of the funds seem to.
Yep. Okay, all right. To John, thanks so much indeed for joining us. John Mayer from SP Angel with a look at base metals.